It is our home appreciation show. We'll show you how to decorate it, renovate part of it, but first, let's start with buying a home. Whether it's your first time, you're downsizing, or looking at a vacation home, you need to be smart with how you do it. Is it an FHA loan? What is a PRI, PMI? How much is my down payment? And what's the monthly, adjustable or fixed? Buying a home is complicated, but our first guest makes it so much easier for you to walk through the door to home ownership. Please welcome Renee Morton, the president of Morton Mortgage. Good morning.
Thank you. Good morning.
I gotta tell you, when I bought my homes, I had no idea what I was doing. I was like, sign here, okay, right? It is complicated. You kind of got into this business by accident, but not really by accident, right?
Right. It was totally. I'm exactly where I was supposed to be all along.
Yeah.
But I got a divorce 16 years ago from the father of my 3 kids, and I found myself trying to find a job to support them, and I didn't finish college, and so for me, I'm like, who's gonna hire me without a college degree, even though I had a sales background, and I just couldn't figure out what I was going to do.
You were taken advantage of in the process.
I was taken advantage of, but I couldn't figure out who I was going to go to work for and how I was going to take care of 3 kids. And so one of my neighbors told me about the industry, and so I got in the mortgage industry so that I could actually work from home, take care of my 3 kids that were young at the time.
Yeah, and one of the other things that you wanted to do was to make sure that people weren't taken advantage of in the process.
Right, because I was 2 times.
Yeah, and that's part of your company culture, which, by the way, your company is kind of like a family. So joining us today, you have members of that office family, and then, of course, your DNA family is also in the audience this morning, your 2 daughters. All right, so as I mentioned, that process can be complicated, but let's kind of go through. People buy homes for different reasons. Let's say a first-time home buyer.
Okay.
There's some incentives for them.
There are. So if you're a first-time home buyer, depending on what your credit score is, if you have a higher credit score, you can go a conventional route, and that's always the better route if you can qualify for that. But a first-time home buyer can buy with 3% down. They don't need 20% like most people think. Mm-hmm. And the PMI, private mortgage insurance, which I don't remember
PMI,
what you called
A, B, C, D,
it,
F, G, H, I, J, K, L, M, N, P. Yeah.
So private mortgage insurance is cheaper when your credit score is higher. So you don't have to put the 3% down. Now, if you can put 20% down, then you're going to avoid PMI.
Yeah.
But on a conventional loan, you only have to have PMI until you have 20% equity in your home.
And this is one reason why you would go with like Morton Mortgage with you, because you'll search for those things. Not everybody searches for those things. Sometimes they just kind of go, here it is, blanket, fits everybody. You actually look for what can fit that consumer. Right.
So when someone calls us and they want to get pre-approved, we talk with them to find out their story. It's super important that we know their story because we want to know how to help them best.
Yeah.
And so the way that we do business, we call it our blueprint to successful homeownership. So we walk them through and actually give them a blueprint so that they know exactly what is best for them, not what's best for us.
Okay, you mentioned if you depending on your credit. So that's another thing a lot of people say, my credit's not great, so I'm not even going to try. Right. You always encourage them to come in and try. Some things can be explained.
Right, so we will give you a direction so that you can go get credit repair if you need to. If you have bad credit, we still want to talk to you. We want to help you so that we can guide you and put you in the right program. And credit repair typically takes about a year. So after a year's not forever, and you can own a home again.
All right. And then there are folks who want to kind of recoup some money if they can through refinancing. So who should look at refinancing?
So if you've been in your home 2 to 4 years now, a lot of times you may have enough equity because Houston is a great city to live in, and your property values will go up pretty fast in Houston if you bought at the right time.
Right.
So if you are planning to stay in your home more than 3 to 5 years and you can save 1 point on your interest rate, it's a good time to refinance. Interest rates are super low right now.
Yeah, what could 1 point mean in terms of savings?
It depends on the loan amount that you have. So it can be anywhere from $100 to $300-400 a month that could save you.
Wow.
And then also removing your PMI if you have 20% equity, that's a huge plus as well.
Yeah. All right, if you watch HGTV, how many people watch it? Yeah, we love HGTV, right? There's all those shows about second homes, right? And so, and what you'll see people going through is like, can we really afford to do this and a whole bit? And so, and some different things that may pertain to a second home versus your primary place that you live. So it's a growing trend right now, but there's a lot of myths on who can qualify.
Right, so if you own your primary residence and you go on vacations all the time and you want to go, you want to own your own property, the down payment is only 10% down on a second home.
Oh, wow.
Which is huge.
I thought it would be more.
Yeah. A lot of people think they have to put 20% down. You have to qualify with 10% down, but that is an option, and sometimes there's no PMI on that as well.
Yeah, and people assume that it has to be out of state to be a second home, or a certain number of miles away from your primary home.
It doesn't have to be, it can be right here in Texas. So we have so many great places to vacation. A lot of people go to Galveston, Bolivar, all the way to Port
Seagrass Beach.
Yeah, Seagrass Beach is beautiful. They're renting from someone else.
Well, that's nice right there. I'll rent that one right
there.
there.
Oh yeah, that one.
Well, and that's the other thing that's kind of interesting. Some people want it to be a private, vacation home for their family, but we have things like your Airbnbs and all that type of stuff today. It can also become income-producing properties.
Right. If you put 20% down, then that's an investment home, and then you can rent them out on VRBO, and then someone else is paying your mortgage, basically, the majority of the time.
All right. So. What is the biggest mistake most homeowners make? And I have a feeling it has to do with leaving too much money on the table.
Can you elaborate a little bit on that question? Because that's very broad.
We go in just, buying a home, but sometimes we don't do our research.
Right.
Again, we take just a kind of a blanket price as opposed to looking at somebody like Morton Mortgage who'll say, now wait a minute, let's see who you are and what you do. And also just sometimes people will buy a house and you're trying to figure out if you can get that monthly. That's all you're thinking about is the monthly. Well, what if something comes up? And so you have a conversation with people about that.
Right. So it's important that that you understand what you're going to bring to closing, and that you don't leave yourself with no money in the bank, because a lot of times,
honey, the water bill is due. Do you have any extra?
You're going to have things that break, and you're going to want money to move in and buy new furniture and things like that. So when you work with us, we shop different investors within our company to make sure that you're getting the best interest rate, the best PMI, and then we go over what your cash to close is going to be, what your payments are going to be, and so you're not just going shopping for a home and you don't understand what you're doing. You know what your cash to close is going to be before you ever go shopping.
So they look at your credit rating, of course, but are they also looking at what cash you have available in your accounts?
We are. We're the ones that look at it. So we determine if you have enough to actually qualify, and then we explain what you need. And it's important that you're not left broke at closing.
Yeah,
so a lot of people don't realize that.
All right. And by the way, I mentioned her two daughters are in the audience this morning. One of them bought her first house at 21.
She did.
Wow. That's okay, right? Yeah, there you go. Pretty cool. If you are looking to buy a first home or vacation home, Morton Mortgage can get you approved in 24 hours or less. Visit them online at mortonmortgage.net or give them a call at 832-912-4096, 832-912-4096. I love that, 24 hours or less, so you know.